Thank you for joining today's panel. It's the discussion on margin pressure. Margin pressure has been happening for a few years within asset management, but it's becoming more magnified over the last 2 to 3 years. The discussion is based on the lens with technology. First sort of overarching question, what is the role that technology plays within this space? What are you seeing?
All too often we find that clients have reached for new technology or new ways of doing things to try and create the benefit they're after, when actually just doing what you're doing but doing it better is the first thing to look at. So coming in as a consultant and talking to people about how they're doing what they're doing and looking for improvements that can be made without drastic change is the first thing. If you're focusing on the objective of increasing your margin or not being so affected by the reduction in margin, then how can you make efficiencies without spending a lot of money? There seems to be this idea, there's some golden bullet out there that if I bought the latest software, my costs would go down. I haven't worked on many projects that have come in under budget in my time. So think about actually how much the change is going to cost in its entirety, how much the change is going to cost for the data, the people, all the changes you're going to need to make, and what's the actual return on investment of that project. More often than not, I think that people can make efficiencies without major expense, just by doing things better, just using consultants that know what they're doing, using people who've got experience, rather than the people that have been in the business so long and are so used to doing it the single way. And just saying, right, who's doing what in the city? Who's doing what better? Who's managing to spend less money doing the jobs that we're all doing? And how are they doing it? And invariably it won't be by installing the latest software. It would just be being a bit smarter, just being a bit more efficient, and just focusing on what actually is the job you are trying to do, rather than focusing on the tools that you're doing it with.
Sort of a synopsis, it's really about what is the outcome you want, prioritizing those.
Outcome focused, absolutely outcome focused. And it might be that moving to SaaS or getting some more efficient software might be out there these days that the clients are not making use of. But I'm always a believer that that's the last option. The first option, do nothing. The second option is do what you're doing and do it better. And the third option is drastic change.
Software as a service has a very mixed terminology, but generally it's a mixture of outsourcing of technology with a greater or less extent on the outsourcing of ops with some of the larger providers. Thoughts on how to approach it, key to success with that?
It's an opportunity for moving to SaaS is potentially of reducing your technical debt.
Yep.
You're no longer having to maintain that software that you built decades ago, that you've every couple of years you've done a new release yourself. You're shifting that now to a provider that you're paying for. So it's not your problem anymore. You can kind of reduce the amount you're having to put aside to maintain it.
I think one of the advantages that I see clients after when they go to the SaaS is known costs rather than unknown costs. So with SaaS, typically you've got a bill. You know what the bill is, you're going to pay it every month and you're going to get the service. With projects, there's upgrades, there's faults, there's things you find out during the ownership that are your burden and you have to deal with them. What the SaaS might seem more expensive to begin with, but the number of hidden costs are vastly reduced, and I think that's what clients are after.
Yes, there are opportunities for the scalability of SaaS and more known costs, but I think on the other side, and can't outsource the problem. So you need to be very clear in terms of what you're looking to achieve as part of that offering as well, and having it comes back again to that clear operating model.
We're definitely seeing it's a way of making an edge. If you look at the amount of regulation there is in the city now compared to how there was a few years ago, the amount of the TCF rules and treating everyone identically all the time, I think that private markets is seen as a way of actually putting some intelligence back into the process, rather than the sort of formulaic robo trading such as happening at the moment.
So just to drill down further on that, when you say intelligent edge, it's almost like you're hinting at you need to know a little bit more about it rather than traditional asset classes.
I think so. Yeah, I think so. Although it's probably not an area we don't tend to get involved in the investment advice. Obviously, it's not something not our expertise, but systematically, when looking at private markets, it's years behind the more typical assets that we deal with. Interestingly, back in the day when I started out, multi-asset was equity and fixed income. And nowadays, multi-asset becomes equity, fixed income, and private market in the multi. So it's becoming more and more common. If you look at the systems, trading equity, trading bonds, trading OTC, trading ETD, we all know how to do it now. We all know what systems have to do. I think there's very little differential between the major players who are selling systems that do that. I don't think there is anywhere near the same stability in private market software. So many different ways that people are currently going through the operating model of trading private credit or private equity. And there's no standard approach, therefore it's difficult to create standard software that delivers what people want. I think maybe that's one of the things that's given the edge.
John, question for you. If someone is coming to you and asking the question of, I have legacy technology, I have years worth of technical debt, but I have a chance to make a transformational change. From that standpoint, what would be your plan of action?
I go for probably a lift and shift approach. I think you've either got to, if you want to keep your old sources of data and silos of data,
yes,
trying to maintain potentially data in two places, you don't really want to do that. You want to have data all in one place that you can access with your new technology. So using cloud technologies like Snowflake. There's a drive for more self-service within the industry.
Everyone's used to having more information at their fingertips than ever before when the internet has given us that. So whereas previously you'd wait for your quarterly statement.
Exactly. Yeah.
And you'd be sitting there in the post, now you expect to be able to get it online now and see the changes and be able to speak to the person making the decisions and find out why he did it. It's just that desire. But that, of course, has a cost. And that cost has to be taken up by somebody, so ultimately the customer needs to pay more. Customers don't want to pay more because the guy down the street's offering it for free.
Yeah.
And there's your pressure on the margins. Technical debt is the cost it takes to go back to zero. So basically, if you didn't have anything and you started from scratch, that's the cost of your improvement.
Yeah.
Technical debt is when you add on the cost of unwinding where you are now. Now, I think that when people are doing new projects and people are looking at software to install or systems to install, they don't look at the cost of the divorce afterwards. They don't look at how much it's going to cost to unwind this if we do go this route. With SaaS and with the more pay-for-as-you-use type products, I think technical debt is going to be a thing of the past as we go on. I think with the old-fashioned buying servers and buying licenses and getting out licenses, I think there's going to be less going forward. The flip side of that, though, is that the knowledge of how your products work, how the systems that you're using works, is also disappearing. The decimation of the change teams, decimation of project management and BAs within the organisation is, it seems, a cost saving.
Yeah.
Yeah, and people have reduced their change teams and their IT teams to reduce cost. And they've been able to do this because, as we were saying earlier, because of SaaS, because of people moving to buying services rather than buying systems. Yeah. When you need to unwind that decision and you need to move on to the next system or the next service, you do need that knowledge. You need people who know how your current system's working, as well as how the new system works. As a consultancy, we can provide that. That's what we do. That was one of the reasons why we thought that going into this market now would be the right thing to do. You must allow for that cost in your decision. You must realise that it's not for free. You might get rid of your change team, you might get rid of your BAs and your PMs and your IT team now, but you will need their knowledge when you come to replace that system with a new system.
Yeah.
And it is a cost that you need to account for.
And look, that's a great point, because I think when we at Liqueo run, let's say, an end-to-end program, we start with the business case, and at the end we talk about day two activities. We talk about benefits realized, and within that there's a section on the exit, right? So exiting from the current model you're putting into place.
It's life cycle of the problem.
Yeah.
So you have to understand the problem first and resolve the problem, but you have to know that whatever you're putting in has got an end of life as well. And you've got to think the whole project through.
Exactly.
The project isn't just getting something live, getting it used, and then exiting from it at the end, because there will be an exit at the end. What is the long-term plan for your organisation, not what is the short-term plan for this particular piece of software you're putting in.
Yeah, and I think we see it more because we see the longevity with clients, whereas it's a bit like politics. The decision maker may have moved on, so it doesn't affect him or her, but you're seeing it from a context of I'm supporting the client for a number of years, and we know that. And I think you've actually had a situation where you went in a few years ago, implemented it, and then you're coming back in to say they're looking to replace it, and the story.
I've put things in and taken them out
in
the same organisation.
Yeah.
And I think as working in the city, I think you're going to do that. You get a good reputation from where you've worked, and when work comes around again, they rehire the same people because they know what they're going to get. Going back to the topic of margin pressure, it's about making the right decisions, to be honest. There's a lot of times that individually or as part of Liqueo, you come into, sounds a strong word, but rescue projects, or basically get people out of situations they don't want to be in. And those costs ultimately end up, the cost of the business, they end up affecting margin. The desire to spend your way out of trouble, to spend money on new systems, on the latest glitzy product to get yourself out of this particular problem, it's too great. What people should be investing in is knowledge and skilled labour, so that you can come in and actually make the right decision with experience.
A question on ESG, a topic for a few years now. How is technology enabling that, as there isn't really a standard in the market, or the regulator hasn't driven to a standard as yet?
What we're seeing with ESG, it's just the volume of data that is now required compared to sort of pre-ESG. I think I heard a quote of 3,000 extra attributes per bond that are ESG related. Now, without technology, you simply could not look at that amount of data.
And also kind of in technology for validating that ESG data. So you might have a company that's claiming it's kind of ESG certified, but then you've got technology that's scraping kind of the news feeds to see, okay, well, is this same company that's saying it's ESG rated actually polluting the environment? And that's where technology is coming in to do that quicker validation, rather than it being days and days. That it's instantly can be validated.
Okay, yep, thank you. Quick focus on regulations. It's obviously it's a key factor in the margin pressure, and the regulatory burden, and the landscape is constantly evolving. How's technology helping?
I think technology and regulation, I think it's a great partnership, because regulation is generally boring and it's monotonous. Where technology comes into its own, you can quite simply automate a task that has to happen again and again and again, where people make mistakes and technology won't, if it's set up correctly in the first place. Whether it's compliance regulation or whatever regulation, just a machine running the same thing time and time again, it's far better than employing people to do that. And I think that, although it's expensive to install, I think it's one clear winner where technology is well employed in our industry.
And it's an opportunity for AI, certainly, as goes for interpreting those rule to regulation changes into rules that are then implemented into it. And then it's just almost a validation check to say, yes, that interpretation is correct. And
there's a reliance still, there's the AI being used for regulation, but I think we all know that AI is probably going to be a short-term fix. It's helping to reduce costs today, but somewhere down the line there's going to be a regulation as well on the use of AI. That's going to introduce another cost, and how do you keep ahead? So I'm all for adopting a lot of this technology and finding other ways to do things quicker and more smarter, but I think we also need to be mindful as well that there's other things to come down the road.
Second to last question, the classic question for medium to large size asset manager. Do you go an all-in-one platform and service, or do you still stick to a best of breed but then manage it internally? Andy, I'll start with you.
Know your problem is definitely the first thing to say. What problem are you trying to solve?
Yep.
And don't just think about the precise problem, but the whole operating model. So all-in-ones, the benefit, you've got one supplier, one cost. It should be more manageable, more knowns, less in-house build required, more contained problem. That should be it. But they're very expensive, these all-in-one systems. Yeah. And if you have a problem you're trying to fix, then maybe a solution to fix the problem is the right thing to do, rather than throw everything away and start again. Yeah. The real habit people have got of focusing on what problem they're trying to fix, buying something that does 100 times more than they need it to do, and actually not fixing the problem they started out with, but creating a whole host more that they weren't even on the radar before because their best-of-breed systems handled them quite well.
I mean, I'd look at it from the perspective that best of breed, you've got all those integration pieces that have got to sit between them. And so you're building up potentially technical debt around your organisations and trying to marry everything together. That's where you're all in one system. You're outsourcing the problem to somebody else potentially to deal with that.
The problem a lot of companies are trying to solve is reducing complexity in their operating model. So an all-in-one is the obvious answer for solving that problem.
But not always the right answer.
It's not always the right
And
answer.
then not from a cost perspective, probably.
It's like with all these decisions, it's not making rash, short-term decisions which are going to have longer-term implications.
Yeah. Okay. Thank you. Final question. Does technology actually give the asset manager a competitive edge?
Absolutely. You can adopt the technology, but I think it comes back again to being clear in terms of what the problem is you're trying to solve in terms of the technology, scalability, access to a lot of that functionality. But I think you need to be careful in terms of who people, engage as partners, whether it's a vendor or getting the right consultancy from the start is key. And having a clear view in terms of what that end state operating model is.
Andy, closing remarks?
It can do.
Yeah. Ooh, okay.
Technology, of course, presents opportunity. It presents opportunity to reduce costs. It presents opportunity to create efficiencies. But it just presents the opportunity. In itself, it does nothing. It needs to be employed correctly. It needs to be employed at the right time. It needs to be employed in the right way by the right people. There's some fantastic technology out there currently that's been employed dreadfully at various organisations that is costing them money every day. They try and use it, and they try and tweak it and make it do something it was never designed to do.
Yeah.
So I think, yes, technology can improve situations, it can reduce costs, it can create efficiencies, but it doesn't do it on its own. It still needs intelligent implementation, intelligent use. And you still need to understand what your end product is. What is it you're trying to do with technology to create the efficiency?